Trading doesn't have to be complicated. Hey there, traders! Ever feel like you're staring at a stock chart and wondering, what the heck is going on? You're not alone. There's a simple tool that can help us make sense of those up and down lines called RSI, a popular indicator that can help us figure out whether to buy or sell. What is RSI? Let's break it down. RSI stands for Relative Strength Index. Don't let the fancy words scare you. It is used to measure the strength of buyers and sellers to determine whether a stock is overbought or oversold. But why should we care about this? Because knowing if a stock is too hot or too cold can help us decide if it's a good time to buy or sell. Too hot? Maybe it's time to sell. Too cold? Maybe it's time to buy. Let's dig in. RSI is calculated using the average gains and losses over a period of time, typically 14 days by default. You can tweak it to fit your trading style. The shorter the period, the more responsive the RSI will be to recent price changes, which is great for day traders looking for quick signals. With quant themes, you can freely adjust the calculation time period and the parameters that will be mentioned later in the video to suit your needs. How can we actually use this as a beginner? Here are 2 easy methods. Firstly, look for overbought or oversold signals. When the RSI is closer to 0, it means that the sellers get more power and they're selling stocks in bulk. On the other hand, if the RSI is closer to 100, it means that the buyers are stronger and they're buying stocks in large quantities. RSI could help us spot potential reversals, which means we could buy stocks before they rise and take profits as soon as they fall. Usually, if the RSI is above 70, it can be considered as overbought. It's like the stock is on a sugar high. It might need a break. Time to think about selling. Below 30? It's oversold. That could be a signal to buy, like finding a hidden gem in the clearance section. Secondly, look for divergence. This one's a bit tricky, but it's super useful. A bullish divergence occurs when the price makes a lower low, but the RSI rises and makes a higher low. This may indicate a change in direction and a move higher. Conversely, if the stock price is rising but the RSI is falling and making a lower high, this means a possible downward trend. Red flag, bearish signal. That's all about RSI. Here's the recap. Take screenshots. So the next time you're staring at a chart and feeling lost, remember, RSI is your sidekick. But remember that RSI, like other technical indicators, can give us false signals. Sometimes stocks that are overbought and oversold don't turn around immediately. It's better to get validated with other indicators. Want more trading tips? Hit that subscribe button. Happy trading!